Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. And okay, let me start off by saying, guys, if you're in the chat room, I see a few of you guys trying to fade this dollar weakness. Okay, I'm gonna suggest something for you. Just take it with a grain of salt. For those of you that are in the chat room, I know I was out for a little bit, but just be really careful. You guys that have been listening to me for a long time know I'm a pretty big advocate of when I've got everything going in one direction, I have a hard time fading that, right? So let's talk about these majors for a moment, and then let's talk about what it actually means, okay? We've got the euro dollar that is and has broken out bull flag pattern. We've broken the downtrend line. We broke the 115 level, and what we're seeing is rallies and then stall. Okay, so you're not even seeing a pullback. You get a rally, stall, rally, stall. That just tells me there's insatiable buying going on right now. But it's not just the euro. I mean, you got the cable that is now above this, multi-year trend line, the 200-day moving average, and as long as it's above 127, it's in breakout territory too. The Aussie dollar has now cleared resistance. We got a V shape. I mean, I hate to say it, but well, first of all, we're at that 618 retracement. But man, if this breaks that 618, we're probably going straight to 74 cents in the Aussie. Kiwi dollar, multi-year trend line, cup and handle pattern. We're probably going to at least revisit these highs, if not higher, 67, 68 cents. Dollar Canadian, finally giving it up below the 200-day moving average, below a lot of support. We're probably heading back down to 133. Dollar Mexican peso on the verge of collapsing here. I would not be surprised if, tomorrow we're trading down, down below 22 cents, right? So you've got the dollar Swiss is now getting smashed, finally breaking down. Dollar yen, it's close, but man, we cracked through this. We're going to trade down to 106, which that might happen in Asian trade. What I'm trying to point out to you is that all of these major currencies are all moving in one direction pretty much at once. And when you have the dollar steamrolled almost against every major currency, dude, it's hard to fade. I mean, you can try it, but if you try it, please trade with small positions and put your stops tight. Just don't overexpose yourself. You know what I'm saying? Because this is one of those situations where we could, let's just say we stall right where we're at everywhere. Euro dollar stalls here. We're above 115 by the end of the day. We just sit here at 115. Cable, it was above 127. Let's just call it 127.20. It even gives back a little bit. Aussie, above 71 cents. We give back a little bit, but we basically hold. These are the times when we get into Asian trade and they ratchet up another 50 pips across the board. You know what I mean? Because they're not giving back any gains, and then everybody's trying to pile in, trying to get back on, trying to get on this train. So this is like, from what it looks like to me, especially if we close near these levels, we're at day one of a pretty big breakdown in the dollar, so I guess I just want, oops, I didn't want to do that. I didn't want to do that. I guess I just want to say, just please be careful. Dollar index does look like we're going to 94. If we go to 94, where does that put the dollar pairs that you're looking at or you're trading? Again, whether it's the euro, the pound, the Aussie, the Kiwi, where does that put the dollar in? Where does that put your particular pair if we head down there over the course of the next couple of days? And you got to think about that. And, you know, we're not going to get a straight move, of course, but, you know, when you get these types of moves and then they sustain, like I was looking at the euro today, I was honestly thinking that I was going to get a move back to 114.50 to get long. When we were up here, I was like, okay, I want to get long right there. And I didn't think this was going to happen today. I did not think we were going to break through 115 today. Actually, I think a lot of people probably believed that 115 wasn't going to give. But if you start to see the euro getting really comfortable above 115, you have to cue off of that. You know what I'm saying? So just please be careful. Okay. Kim said, whoa, fantastic. Dollar index is killing it. Yeah, dollar index is getting smashed. It is. You know, again, I look around and I think this could really be just beginning. And one of the other comments that one of my colleagues over in Greenwich or in Connecticut said this morning, or just actually about 10, 15 minutes ago, he's like, don't you find it weird that the stock market's, pulling back a little bit? You know, we got the NASDAQ pulling back a little bit, S&P's off of its highs, Dow's, well, I guess the Dow's trying to break out, but you got the stock market's a little soft, and then you've got the dollar index that's still weak. That is surprising. And so that what that tells me is if we start to see, the NASDAQ, like for example, that just pulled back 38%, let's say it does one of these, we hit new lows, 50%, then we start rallying again. What happens to the dollar after that? My assumption is the dollar is going to, continue to get wrecked, right? So that's just something to think about. Gavin says, don't stand in front of it. Yeah, I mean, this is one of those situations, and we don't get them that often. We've been in a range-bound environment for so long. This looks like an actual real dollar breakdown. And so when you have an actual dollar breakdown, it's the natural tendency, because we've learned from it for so many months, it seems like, oh, I'll just fade it. We got some weakness. Let's go ahead and buy it because we're in a range. But if you look at the dollar index, we're actually breaking out of the range, right? I mean, this bear flag, this is a classic bear flag, by the way. And let me explain that to you, and then I'll answer the other questions, and I'll let you guys roll here. Look at this, okay? So we have a bear flag. Whether it started here or it started here, we could argue and draw either one. It doesn't really matter. But what we did stop at is the 38% retracement. So down, 38% retracement. That means it's probably an A, B, C, D, right? That's why, because it's only a 38% retracement. So realistically, we're probably heading down here. Doesn't mean we're going to go down there today. Doesn't mean it's going to happen in one fell swoop, but that's going to be the path of least resistance in the coming weeks, right? So if we take that into account, then we have to think about, if the dollar index probably, I meant to erase all that, clear all drawings. Okay. So, taking that into account, I think that the risk is that we continue to drift lower towards 94. And I am looking to, if the dollar index gets back here, let me just go ahead and reset this chart. Dollar index gets back here tonight, tomorrow, sometime, I'm going to reestablish dollar, whatever I sell, like I'm long the cable right now. I'm long some euros. If I sell some of that, I'm long some Kiwi. If I sell like over the course of the next 24 hours, if we back up, like by tomorrow we do this, I'm going to sell right into strength tomorrow. That's going to be my plan of action moving forward with the dollar, is I'm going to sell rallies, right? One last thing. And Nissim says, how can you sell a dollar index? I don't sell the dollar index. I actually just buy euros or buy the pound or buy Aussie dollars, whatever I think is going to be the best trade, like at that time. I use the dollar index more as a guide, if that makes sense. Does it make sense, Nissim? Shohan said, what about the Euro Aussie? I'm glad you brought that up. I'm still bullish the Euro Aussie. I know it's come off a little bit today, but the Euro, with the Euro breaking out and the Aussie breaking out, I think the Euro Aussie is probably going to stay relatively stable. Okay. And one of the things I was looking at here, we're probably just range bound. We're probably just going to be bouncing around between 160 and 165. I know it's extremely frustrating since my cost average is somewhere around 162.50, and I'm really not adding to it. But if we might have actually just put in a little false breakdown here, and we might trade back up towards 163. I think that the Euro rise is going to be more radical than the Aussie rise, because the Aussies had such a sharp recovery. So I think the Euro is going to race up to 118 in the coming 2-3 weeks, right? I think the Euro is going here, and I think the Aussie is probably going to go, 72 cents or so, but maybe even a little bit more. But it's not going to be as easy going as the Euro. I think the Euro and the cable are going to play some catch up to some of these commodity currencies. There's an interesting article right here that I left it up here specifically for you guys on Bloomberg. Euro is turning into a credible safe haven after the EU rescue deal. Why is that? Well, it's because the European Union basically has a fiscal backstop, if you will. So now there's more of an alternative to just buying dollars during risk off. So I, for one, do believe, and this is exactly what happened, and you guys have heard me say this for years, and I'll sound like I'm repeating myself to a lot of you guys that have been listening to me for years, but I'll say it again. When the poop hits the fan, the dollar is the beneficiary. When the poop hits the fan, that means when all hell goes loose or breaks loose, the dollar is the safe haven currency. It's exactly what we saw. Pandemic struck. The world came to a screeching halt. The dollar spent 2.5 weeks just ripping, right? And then the Fed stepped in, and then things started recovering. The dollar's getting smashed. I think that is going to be pretty common. If the stock market comes down, like let's say the S&P corrects 1 or 2%, I don't think it's going to have a negative effect or a positive effect on the dollar, because it's not like the stock market's really aggressively coming down. People aren't panic stricken. When people are panic stricken, they run for the dollar. But if the stock market's just coming down because maybe it's a little overbought and it's oscillating, the dollar is not going to weaken. We've seen that for the last several years, actually for the last decade, since the financial crisis, right? And soon as the poop hit the fan, we went on a worldwide lockdown, the dollar ripped, but then it's eased again. And I think that, and with the Fed acting the way they're acting, doing what they're doing, and all central banks providing a lot of liquidity, the dollar is just going to continue to not be so attractive. The flip side to that is during a stock market sell-off, if the stock market sells off, the dollar might strengthen a little bit, but I think that's an opportunity just to sell into that strength, right? Hope that made sense to you guys regarding the dollar, and just be really careful. I mean, I'm a buyer I'm trying to buy the euro on a dip, and frankly, if we close above 115, I have to just start adding up here. I really, my orders to buy more euro are down at like 87, 55. I'm looking at like some of my live orders. I just don't know if they're going to get down there. And that means I'm going to have to probably buy them by the end of the day. Not because I need to buy them. It's just I think that the dollar is that week, and it's breaking down across the board. Okay. All right, guys. And going back to this whole story about the euro being this credible safe haven, it is. And that means that, during periods of risk off, I think you can be a buyer of the euro Aussie, euro New Zealand. I think more, I don't want to say aggressively, I guess aggressively, more, comfortably, more of a, buyer of the euro crosses versus, before it's like, okay, the stock market slides, the euro Aussie doesn't really bounce, or the euro New Zealand doesn't bounce too much. I think you're going to see it bounce even more now because of the events that happened this last week. All right. All right, guys and gals. Look, you guys that are listening to me live right now, thank you so much for your support, your continued support. I always appreciate each and every one of you, especially those of you that are in the chat room with me, day in and day out. I know I was out for an hour because I had to do grocery shopping. Well, there's in my local grocery store here, there was probably about 15 people in there, which is just how I like it. I can't go during those, periods of high, like a lot of traffic. Try to stay away from these places. Anyway, you guys have a great one. And for those of you that, if you're listening to this after the fact, thanks for listening in. But try out ForexAnalytix. It's only $1 for 10 days. You can try it out, and then we'll see you in the chat rooms. All right, guys. Thank you. Have a great one.